Started the video.
Hey everybody, we're in Naples today. We're back where we should be.
Freaking Naples. Scott DiGregorio here.
Edgardo Ballantyne.
Primary Residential Mortgage. How is everybody doing? We got a lot to talk about today.
Yes, we always do. We talk a lot.
True.
We change this. I like to change this after the video starts.
For some reason, your lighting is always better. It's very annoying.
All right, so look, we decided we're going to open up. This, we haven't done an analysis of the housing market in a while.
Yes.
And being that you're a Collier County guy and I'm a Lee County guy, let's kind of stay
Let's
in
see
our
what's
world.
going on. And it's an interesting one. There's a lot of the stats are interesting.
They are, and what the stats, one of the reasons the stats are interesting is that they're not really living up to all the fear and hype and crap that we're hearing out there.
They're not living up to anything.
They really aren't. So, all right. So let's
let's start with Lee County. Lee County is a bigger piece of the pie.
Yes.
So let's start with Lee County.
So look, I'm looking. This is available. Available. You guys have any or want this? Just DM me and I'll shoot it over to you. But this is a comparison of April 2019 versus 2018.
Okay.
And a couple things that are interesting. So on the negative side of stats,
Okay.
closed sales are down 6.8%. That's not a big number, but it is down. Number of listings, inventory is up 10%. We have I'm talking about single family homes now. We have 6,600 single family homes.
Okay.
Which is interesting. Inventory is up 7%. Just talked about that. The other two stats that are interesting. One, the amount of time it takes on average to get to contract, from the time it's listed to the time it goes on the contract, is up over 29%. It's up from 55 days to 71 days. And then also the selling price versus the asking price is down from 95.4% to 94.8%. So look, the only big number there is the median time to contract. So the houses are sitting longer, fact. But on the other side of it, median sales price is up 1%. And I know it's only 1%, but it's up. Pending sales are up 5%.
Okay.
So, and then on the condo side of thing, it's kind of similar. So look, here's my thought on this, okay? There's nothing in here that's a sign of the market crashing or collapsing or whatever.
Okay.
What this does show to me is that the market's kind of stabilizing out.
Okay.
We've had 10 years of this. And I think things are stabilizing now. What I am seeing, okay, so that's numbers and statistics, and that's great.
Yeah, what does that mean? Once we get into it, what does that mean, let's say, for the buyer first?
Exactly.
What does it mean for me as a buyer, for my client as a buyer, that, and I understand that some of them is pretty simple, but that there's more active listings, that there's the higher supply, which goes with it, that it's taking longer for these listings to sell, and that the purchase price to the listing price is lower.
Yeah.
How can I use that as a buyer? How can I arm myself as a buyer?
So look, what does all that mean? You're in a better negotiating position as a buyer, okay? You cannot steal houses, all right? We're not talking about that, but you're in a better negotiating position. I'll give you an example. I had a client, inspection came back, tens of thousands of dollars worth of repairs. And what was super interesting was that the seller agreed to it. And look, this is all anecdotal, right? We can't prove this, but
of course,
I would think that getting $30,000 worth of repairs done on a $250 house wouldn't have happened last year. Definitely wouldn't have happened the year before, but it happened now. And I think you had one with 5% seller pay?
5%, and this was in Collier, and let's just jump into Collier because the numbers are fairly similar.
Not surprising.
They're very, very similar. So we have more closed sales. We're up about 12%, 12.8%, so almost 13%. The days in the market are up as well. Mm-hmm. So there's the houses are sitting more. The current list price versus the sales price versus the list price is down a little bit. It's a little higher than in Lee County. Here we're at 95.4%.
And I'm at 94.8. So look,
it's the same.
Same thing. You're about and a year ago we were at 95.4, and now we're at 94.8.
Yeah. So same thing. So when it comes to the buyer, we're seeing the same thing on this side. We're seeing that there's more inventory for them to pick and to pick, and that sellers, at least the sellers that need to sell the house for whatever motivation they have, are having a tougher time selling it.
Yeah, and look, and this is where we talk a lot about we did that whole reality check series,
Sure.
and this is where fear can really play into your favor.
Yes.
I was speaking to a buyer yesterday. He and I talked years ago, and then nothing ever came of it. And then he found me on social media, and he's looking to buy in Pine Island. And that he's like, so we talked about the market. He's like, so what does all that mean to me? I said, you're probably in a better negotiating position today than you were 2 or 3 years ago when you were looking.
Well, yeah, what you were saying. I got a client that here in Collier, they got 5% seller concessions.
Yeah, that wouldn't have happened.
5% seller concessions. That typically doesn't happen. But this is the thing. This is why it's so important to, when you're shopping, if you're interested in shopping or if you're a realtor out there, to look at the stats. Because you hear, look, we got a 5% seller concession. Wow, this is ridiculous. Like, this is crazy, right? But it's right in line with the list price versus the sales price. We're at 95.4. So pretty much what we did is we offer full price and we ask for 5%. It's right in line with the market.
Right in line with where it should be. And that's the deal. So look, you're in a better negotiating position. You have more houses to choose from. But you're still going to be paying relatively close to the asking price.
It's still very close.
And look, it's worth verbalizing. I mean, you and I being loan officers, okay? These statistics do take into account the cash buyers,
yes,
which are plentiful, okay? 30-40% of buyers are cash. So they're paying close to full price. And if you're a finance deal, when you're rolling in closing costs,
that's right.
You may be paying slightly higher numbers than what we're talking about here, but give or take, if the home, and this is so critical, if the home is priced right, you're in a slightly better negotiating position, but the market is still stable. And like we've been talking about, I don't see a crash happening. I just see a stabilization happening, and that's healthy.
Now, let's talk about a negative stat that I have here. I have that the median close price is 5.6% below last year.
Okay.
What do we have in
well, I'm up. My median sales price on a single-family home is up 1.3%. On a condo or townhouse, it's up 3.5%.
Okay.
But what's interesting is the last 4 or 5 months I've been checking, it's actually been down.
Yeah.
So, but again, look, I'm sorry, whether it's down 2% or up 1%, it's the same crap. The prices are stabilized.
Right.
And it exactly supports this little thing. So today we're here. Last month we were here.
Right.
Give or take, it's the same.
And look, and I think it's important to take these statistics and really think through it. Because while it is true that you're in a better negotiating position, if you're getting into a house thinking that your house is going to appreciate 10% for next year, maybe you should revisit that.
Look, I had a talk with a client yesterday. They're in their early 70s. They want to move down here. They live in northern Florida right now. And part of my conversation was, guys, there's never a perfect time to do things, right? It's like there's never a perfect time to have kids. It's just, when you're in your 70s, let's start talking about life expectancy.
Right.
All right. Let's acknowledge the fact you've rounded third. Okay.
Right.
And and look, God willing, it's a good long while. But either way, man, you're in that final stage of life when you're in your 70s.
Right.
So you got to start to make decisions. You got to balance prudent financial decisions with, you don't want it to be too late. I lost an uncle last year, and he never spent any money, and now he passed on. His wife has nobody to enjoy the money with, and he's gone. And look, to each his own. Right? There's no judgment here on this, but we got to factor that in as an option. So look, I mean, and the other thing too that we haven't talked about, interest rates have come down.
Interest rates are lower. Yeah.
Okay,
and
so
they have, not only they have come down, because for a while we've been in a weird market, man, where it goes up and it goes down and it goes. They have stayed down for quite a bit now.
They have been.
And we look at the indicators and you look at the news, and the news are saying that any minute they're gonna get worse, and man, we're continuing that. It's been really nice. We're being able to lock people at the lowest rates we've had in the past 2 years, 2.5 years, which is really nice. So you have to counterbalance that with the market stats too.
Yeah. So look, don't get caught up in the hype because your friend or your cousin or your colleague is telling you the market's collapsing. Do yourself a favor, pull up statistics and look at data, because the data will free your mind to reality.
And like you're saying, look, when you can take into consideration the fact that maybe in this market is a bit easier to get something like seller concessions. Maybe in this market, because of all the regulations, and I know we're going to start talking about that in a minute, but it's easier to get into loans with really low down payment and with really low interest rates. All of that, you have to take all of that into consideration when making the decision of buying or not.
Right.
Because even in a market where the market might be down 2% or whatever, when you add those things, when you add the low credit scores and you're able to get into, when you add the low interest rates, when you add the fact that maybe you can get in with very little money out of pocket because of the help with the seller and the help from us,
Right.
it might be a good time to buy.
It is, and you know, people ask me like, "Hey, should I wait 6 months or a year?" And I'm sorry, the statistics just don't, you know, and it drives me nuts sometimes because my answer sounds self-serving, but it's not. It's data driven, man. That there's nothing here and there's nothing there that's telling people, "Hey, if you wait 6 months, you're going to get the house a lot cheaper."
Well, one of the things that I started to do is, well, let's say the market goes down 2-3% in 6 months. How much is that really going to affect you versus how much money are you losing in amortization?
True. Yeah, that's true. Yeah,
And
pay rent for 6 more months.
Because that's the other thing.
Right.
You're paying rent for. If you tell me, look, I'm living rent free, I'm not doing anything, and I can wait for as long as I want, and I'm extremely comfortable. Okay, you might have
Fine.
a conversation, but your alternative is, I'm going to renew my lease. I'm going to pay rent for 6 months to a year to save $3,000 on the asking price.
Yeah, which is
on the
$15
price.
a month.
So it's look, all of these conversations are worth having them.
Of course.
And I think that if you're shopping out there, or if you're interested in selling a house, we don't talk to sellers a lot, but if you're interested in selling a house, you really need to understand what the score is.
And you need to work with agents who understand. It is shocking to me how few agents have these statistics memorized the way you and I do. And I'm sorry, man. It is necessary to know the data. That's just it.
That's the other thing. What's a fair offer? What's not a fair offer? This is the beauty with this.
Yeah.
It's numbers.
It's numbers. It's math. And you know, a good agent should be doing a CMA and pulling comparable closed sales so you can find out. Because look, the average selling price to asking price ratio doesn't mean crap if the house is overpriced.
True. And Lee and Collier County they have vastly different subdivisions in them.
Yeah.
So you need to work with a realtor that not only understands the macro of the statistics, but also in the neighborhood.
But look, it's the person. One of the people the guy mentioned earlier is looking to buy in Pine Island. Pine Island's its own little planet, man.
Yeah.
You need a Pine Island agent. That's just the way it is. So,
all right. So that's that with market stats.
Okay, if you have any other questions or whatnot, just reach out, DM us. Next, let's talk about that product mix, man.
And before that, guys, if some of you are watching this and you're thinking, man, I need a good realtor, reach out to us.
Yeah.
Because we work with plenty of realtors and we know what their expertise are and what they're good at and where they're good at. So we're more than happy to help with that as well.
Yeah, we also know that the random name you may find in Google or on Zillow or whatever may be somebody who's maybe done 2 deals in their life and really can't serve their needs well.
Absolutely.
So it's a matter of working with good people. So so we've talked products, and the products just keep on coming.
Keep talking products, man. Look, we've always told ourselves that we're not those guys. We're not the guys that stand up and say, I have good rates, I have good products, and it close on time. Because we want to give a lot more than that, and we do. But man, I'm excited about these products.
Dude, it is very interesting. Now, where this road leads, we'll see.
We'll see.
As it stands right now,
we'll see when we get there.
We just launched an entire. By the way, for those of you watching, I'm more prepared. I get my water before the recording starts, but it's cool, man. So we have another entire suite of non-conforming products. Some of them are pretty aggressive, man.
Yes, they are.
One of the products goes all the way down to a 500 credit score, and then you could do a 500 credit score one day out of a foreclosure or bankruptcy with 70% financing.
70%, so you got to put 30% down. For
And
those who are in the math at home.
And if your bankruptcies and foreclosures are long ago, it goes up to upwards of 80%. But the fact that we have viable loan programs for people with 500 credit scores now, you need reserves in the bank, you need 30% down. Like, please understand, your debt ratio has to be in line. Like, please understand, it's not 2005 where you don't bring anything to the table. But what we're starting to see is, if you're not good in one area, but you're good in others, we can make it happen.
Yeah.
And it used to be you needed to check all 4 boxes to get a loan. It's just not the case.
And look, we got a big list of new products that we have, and I think we're discovering it every day, and we're looking through it. And one of the ones that I thought was very interesting is, it normally works that you have to be self-employed for 5 years for us to be able to only take into consideration the last year tax returns. Well, now with these products, we have the bank statement loans, and we've been talking about that for a while, but we have one of these products with very competitive rates where we can just choose to only use your last year's income. So for all of you that this is your second year and you're self-employed, and the first year is always rough, we can just make the decision to only use that last year and qualify you based on last year's income.
Or
that's
exciting.
Or
last year you had a really big year.
Or you had a really
big year. Because normally, so let me break this down. So for those of you who don't know, normally we average, right? So if you made 40,000 one year and 100,000 the next, we're going to do an average and come out with qualifying income of 70,000.
Right.
Okay. But with this new program, we could use the 100,000, and it could be. I mean, it could raise your qualification levels to a very comfortable level. And here's the thing that's worth mentioning. Very often, if somebody's tax return shows $40,000 self-employed, that's not actually what they made.
Oh, no. We can use a lot more, too.
Exactly.
Well, that's not really what they make in the real life, but even the way we do the calculation, we can take out more than just the $40,000 in most cases.
Exactly.
It's worth mentioning that product is not just for people that are self-employed. So even if you're W-2 too, for those of you that are W-2, but maybe there's a lot of overtime and you had a big year last year with overtime, or there's commissions or bonuses or things like that, we can use just the last year even if you're not self-employed. So, that's a product that I wish I've had in the past couple of years, because there's a lot of people that average hurts, man.
Yeah, the other thing that's interesting now is, is day one certainty. And day one certainty means that if we could verify your assets and employment online,
it's exciting.
We don't need paperwork from the customer. We don't need pay stubs or bank statements or W-2s or tax returns.
Yeah.
We're getting those documents, but we're getting them through third-party vendors, and we're using those in place of having to drive the customer nuts with all the paperwork. So, just big picture, man, I'm excited with it.
Yeah, the whole mortgage process is only getting easier and easier, and like you say, who knows where this leads to? But for now, it's very exciting. We're trying to make the customer experience a lot better too with this day one certainty. That way, we don't have to keep asking you for pay stubs and keep asking you for bank statements and things like that.
And our online application is, it's faster than a rocket ship. I mean, I'm just throwing it out there. It's faster than a rocket ship. You guys, everybody could pull whatever inferences they want from that. So, look, good stuff there.
Yes.
And let's talk about next week.
Yes.
Dude, next week's big.
We're going to Vegas next
week, baby. So last year, Edgardo and I went to the Mortgage Mastermind Summit in Vegas.
And the Mortgage Revolution.
Yes, and MREV. And it is very, very inspiring and humbling and interesting to sit around people that are doing hundreds and hundreds and hundreds of millions of dollars a year in production. And I know, you and I had a very different outlook on that last year, because, I mean, I'm coming at it with such experience. But it was mind-blowing to me, the consistency of the social media lead generation. And look, that played a big role in what we're doing with our lead program, which I know we'll talk about tonight.
Yeah, look, that really changed the outlook on how the mortgage business needs to be structured.
In today's world,
and moving forward,
sure,
and the relationship that we have with our agents, and the relationship that we have with our clients, and how to communicate with them. For example, we're doing a Facebook Live right now, which before that we probably wouldn't have thought about doing that.
Absolutely.
So it's very exciting. It's exciting to go there now after a year of a lot of growth and a lot of discovering in this. We stumble upon a bunch of different things, programs that worked, that didn't work.
Dude, my business looks radically different today than it did 12 months ago.
Absolutely.
I mean, night and day.
So that's exciting. We're gonna be there learning a lot, sharing with you guys what we learn, and honestly, I'm excited for the agents. I mean, last time we came back and we were able to put out a couple of lead programs for agents, and I know we're gonna get to that in a second, but I mean, I was able to work with one of the agents that she was wasting a lot of money on Zillow and she wanted to maximize her dollar. And she told me, look, the best lead source that I have right now is your lead source. So how about I put my marketing dollars on that? And she spent maybe 3-4 hours with me, did videos, did all these things, and now she's fully automated and she's getting about 2 to 3 leads a day on that.
Look, that's huge. And then the other piece of it, too, from a consumer standpoint, with Barry Habib's and MBS Highway and stuff, I mean, the level of financial analysis that we could provide to our customers today as a result of Vegas last year is literally night and day. And all of a sudden now we are able to really illustrate in just easy to understand terms and graphs how the mortgage decision is being incorporated into their short-term and long-term financial plan. And when I'm sitting down and talking with a 71-year-old person who's thinking about making their final move, I could just do a better job and, more importantly, document. So we go from my opinion to again, statistics and data. And our bond market analysis and understanding is way deeper. And so we could be much better partners to our real estate agents and other referral partners. And we could just be much, much, much better advisors to our consumers. And look,
and in a way that's so easy to digest too,
yes,
which is so important. It's not like all these weird graphs and it's
English.
It's for the consumer.
Yeah,
and Spanish.
And Spanish. And but and look, proper financial analysis is more important during tumultuous times than ever before.
Yes.
Okay, when markets going like this, it's real simple. How quickly can you close and we get the lowest rate? Now, all of a sudden, it doesn't make sense to do. And how do we structure it? What's the exit strategy? And it's just deeper. And I am, despite my 20-something years in the business, those 3 days in Vegas, I walked out of there a much, much, much better advisor and loan originator from an advising consumer standpoint than I was before. And now that the basics are down, can we bring it up another level by going there again? And that's my hopes for next week.
Yeah, absolutely.
So, and we're going to do a Facebook Live from Vegas. So please tune in next Friday. We're excited about it. And the other thing that I want to talk about, and it's more of a me thing, I apologize, but I have been getting a ton of calls from people from Facebook, from social media, from my past clients, asking about, Scott, I'm sitting on a lot of equity. And I want to do something with it. I want to improve my house. I want to consolidate debts. I have one person who wants to buy another investment property. So I have created an entire page on my video library. Okay, my video library is at floridamortgageexpert.com. And on there is an entire series. I think it's either 11 or 13 videos on cash out refis. And it talks about considerations, what to do, what to look out for, and how to avoid a lot of mistakes that people make with them. So please, if you're interested at all in tapping into your equity for any reason whatsoever, go to floridamortgageexpert.com. Watch those videos. They're 2-3 minutes long each. After a couple of videos, you'll have to register, but I promise you there's a lot of good information on there. And then if you want any specifics, reach out to me.
That's it.
So, and then, when you talked about the lead program, which is the only other thing on our list, and look, it's exciting to be able to help consumers find the right real estate partner.
Yes,
historically, people went to agents first, and the agents referred them to the lenders. What's happening now is people are going to the lenders first, and I take a lot of pride in the fact that I'm steering people towards the right agents, because having a real estate license and being a real estate professional are just two different things.
And you know what? It makes a big difference too, because I've talked to consumers that tell me, look, I've been shopping for a house for 6 months or for a year, and I haven't been able to find it. And once I pair them with the right person for what they're looking for, right? For,
whatever it is.
Yeah. They can get into a house very quickly.
Yes.
And the whole the whole experience of buying a house is vastly different.
Of course.
The whole negotiation, all the things that happen from not only just to find a house, because I understand that finding a house is easier nowadays, but from contract to close, it makes a big difference who you have in your team.
Yeah, and that's, a lot of people don't realize it, but where an agent earns their money is after the contract signed.
That's right.
The truth is this: most buyers find the house themselves these days.
Absolutely.
The percentage is higher
Yeah.
than those that the agent finds for them. But home inspection, renegotiations, appraisals coming low, the million problems that you and I deal with every day.
Being able to communicate with us on the front end of things, giving us the address before, making sure that we have an insurance quote, making sure, all of these things matter so much.
Sure.
And a good agent knows those things.
Absolutely. And as a consumer, you don't know what you don't know. So if you're working with an agent that's not pointing out little details, even like walking through the house,
right?
You don't know that they're not doing that, and you don't know that they might save you a lot of time, aggravation, and money. And keep in mind, the worst possible scenario is that they close.
Right.
The deal falls apart.
Right.
It's money lost, appraisal money, inspection money. It sucks, but it's way worse. Like I had somebody complaining, Scott, I wasted $300 on a home inspection. I said, no. You spent $300 to avoid making a $250,000 mistake.
Right.
That's a very different way of looking at it, and I'm sorry, a better way, like a more accurate way of looking
Absolutely.
at it. So look, lots going on here. We have more and more viewers every time. So what's up to everybody? I want to make sure we don't have any questions. Whole bunch of people watching. What's up, everybody? Look, reach out to us, DM us, and next Friday we're going to be coming from Vegas, baby.
Are we in Vegas Friday?
Dude, let's do it.
Yeah. All right, man.
It might be a little bit later, though. We may have to sleep in late. I'm just throwing it out there.
Number one. We'll see you next Friday, guys.
We'll see you. Take care.